Pakistan's merchandise trade deficit rose by 28.89% month-on-month in August, climbing to $3.53 billion compared to $2.73 billion in July, according to the data shared by the Pakistan Bureau of Statistics. In the month of August this year, the country's exports stood at $2.5 billion compared to imports of $6.03 billion. On a month-on-month basis, exports increased by 11.07% while imports jumped by 20.84%. However, the trade deficit decreased by 18.48% year-on-year. In August 2021, the trade deficit stood at $4.33 billion. On a year-on-year basis, exports increased by 11.44% while imports by 8.26%. On a year-on-year basis, exports recorded a jump of 50.11%, clocking in at 553.63 billion rupees in August compared to 368.81 billion rupees in the corresponding month last year. Imports were up 23.62%, rising to 1.33 trillion rupees in August 2022 compared to 1.07 trillion rupees last year. Weekly inflation continued to rise unabated, largely due to the increase in food and energy prices, reaching a record 45.50% year-on-year on the week ending on 1st September, according to data released by the Pakistan Bureau of Statistics. Before this, the highest ever year-on-year increase in weekly inflation measured by the PBS's Sensitive Price Index was 44.58%, recorded for the week ending on August 25th and 42.31% in the week ending on 18th August. The latest data shows that the SPI rose by 1.31% on a week-on-week basis, mainly because of higher food prices. The week ending on July 28th saw the highest week-on-week increase in inflation at 3.68%. Soaring vegetable prices due to damage to standing crops after the heavy rains and floods and a massive hike in electricity rates have also contributed to higher prices. The damage to standing crops will push up the prices of vegetables in the coming weeks. The IMF said in its country's staff report that the average consumer price index inflation was expected to surge to 20% in the current financial year, while core inflation would also remain elevated due to higher energy prices and the rupee's decline. Stock prices suffered a bearish close on Friday as investors reacted negatively to dismal economic data, including a $3.53 billion trade deficit as well as a multi-decade high inflation reading announced a day earlier. Investors' concerns over food-related losses hitting $10 billion, slump in the rupee's value against the dollar, and unfavorable numbers for fertilizer and oil sales in August also dampened stock rates and led to a bearish close. The national currency depreciated 0.17% against the greenback to close at 218.98. The KSE 100 index settled at 42,309.11 points, down by 150.97 points or 0.36% from a day ago. The trading volume decreased 35.5% to 160.14 million shares, while the traded value went down 42.2% to 4.63 billion on a day-to-day basis. Sectors that contributed negatively to the index performance were oil and gas exploration, commercial banking, automobile parts and accessories, oil and gas marketing, and automobile assemblers. Foreign investors remained net sellers as they offloaded shares worth $0.01 million. The currency market on Friday remained in the grip of uncertainty. As a result, the US dollar managed to regain 38 paise against the local currency in the interbank market. A day earlier, the rupee strengthened by just 15 paise despite the arrival of the much-awaited $1.16 billion IMF tranche, leaving the currency dealers uncertain about the future trend of the exchange rate. They said the dollar was traded at a price of 218.98 rupees on Friday compared to 218.60 on Thursday. The open market, which is short of foreign currencies, reported the dollar price soared 3 rupees to 225 on Friday. Profits of listed banks went down 38% on a year-on-year basis in the April to June quarter, thanks to the imposition of super tax in the 2022-23 budget. The drop in quarterly income was 46% on a sequential basis, according to the data released by Topline Securities. The government has imposed a 10% super tax on profit before tax, which has reduced the sector's overall earnings. Pre-tax profits of the 19 listed banks went up 37% and 19% on an annual and quarterly basis to 160 billion rupees in the April to June quarter. Growth in pre-tax profits of the sector was led by a strong balance sheet growth, driving net interest income as well as higher non-interest income. As UN inspectors sought to avert a nuclear disaster on Ukraine's frontline, the West and Russia wounded each other's economies, while Moscow, keeping its main gas pipeline to Germany shut on Saturday, while threatening with price caps on oil exports. Russia's state-controlled energy giant Gazprom blamed a technical fault in the Nord Stream 1 pipeline for the delay on Friday. But the high-level maneuvers in energy politics were seen as an extension of the war, and the ramifications would be felt far beyond Ukraine. The announcements came as Moscow and Kiev traded blame over their actions at the Russian-occupied Zaporizhia nuclear power plant, where UN inspectors arrived on Thursday on a mission to help avert a catastrophe. Gazprom's indefinite delay to resuming gas deliveries will deepen Europe's problems securing fuel for winter, with living costs already surging, led by energy prices.